Sun International has reported strong interim results. That's thanks to the expansion of its online gambling business and sustained income growth across its gambling and hospitality units. The group's continuing income climbed 5%, while adjusted headline earnings per share rose 9.1%. An interim dividend of 161 cents per share has been declared. That's up 8.8%. Looking ahead, Sun International expects a more favorable operating environment in the medium to long term. That's as electricity supply stabilizes, inflation eases, and interest rates decrease. AVI shareholders have made bank. Investors in the consumer goods group will receive a final dividend of 388 cents per share. This takes the total payout to 590 cents, which is an increase of 22.4%. Shareholders will also receive a special dividend of 280 cents per share. This follows what the group has called a pleasing performance during the full year. Headline earnings per share rose 24%. AVI says this was achieved despite a challenging environment characterized by constrained consumer demand, unreliable municipal infrastructure, a weaker rand, and rising raw material costs. Bally Equipment's posted a lower half-year profit. Its headline earnings have come in 6% lower. But the firm, which sells heavy machinery such as dump trucks and forklifts, says it's satisfied with its overall result, considering the cyclicality of the business and the tougher market conditions. Bell's added that it's optimistic about the road ahead. It's pointed to the outcome of the South African elections and the potential impact that the GNU may have on infrastructure projects going forward. The Land Bank has cut its debt and loan book by more than half. That's as the state-owned agricultural lender prepares to emerge from more than 4 years of default. Finance Minister Enoch Godongwana says it's commendable that the bank has been able to repay via its own cash flow 60% of its funding liabilities since defaulting, but it has meant that the firm's financial support to the agricultural sector has fallen from 45 billion rand at its peak to about 17 billion rand. Capit Tech has forecast a profit bump. The bank expects headline earnings per share to be between 35 and 37% higher for the 6 months to end August. This is more than what was previously guided in the firm's trading update in July. That statement had growth pegged at between 25 and 35%. The performance is as a result of improvements in the group's credit impairments and its credit loss ratio. Capit Tech will open its books on the 1st of October. Grand Parade Investments has forecast a surge in year-end profit. The firm says its headline earnings per share could come in at just over 18 cents. That's more than a 7-fold increase when compared to the previous period. Grand Parade says that improvement is mainly due to a reduction in restructuring costs linked to the exit of non-core investments in the prior year. Fila has inked a deal to acquire 3 shopping malls in Portugal. The retail landlord will do this through its Spanish-based subsidiary, Castellana Properties, at a cost of 176 million euros. This builds on the firm's strategy to expand in the Iberia region of Europe. The group says the Portuguese retail market is well supported by customers with a strong shopping centre culture, and the portfolio offers low rents relative to market and strong sales ratios. This presents opportunities for growth in net operating income in the medium to long term. Massive job losses have been avoided at Tuesizwe Platinum. In November last year, the miner announced that 345 positions at its Bakubung mine were at risk. But since then, certain employees have been transferred to in-house vacancies or taken voluntary separation packages. And so only 13 employees have been retrenched, with 7 of those being absorbed by the company's training services provider.